Many traders are aware of the technical indicators that are available on their analytical software, but they may not know how to translate those indicators into clues to get into a trading position. These indicators can be important tools in both the front and the back end of making a trade decision. Of course, when you look at a chart, you kind of get a sense of the direction. You can see that it goes up, it goes down, it goes up, and you kind of just can get that by looking at a chart as to what really the overall trend is. But at what point are you going to be able to trade? So we're going to add just one indicator to the mix, and that is going to be the moving average crossover study. This happens to come from Vantage Point Software, and it's on an S&P 500 E-mini chart. Shows where the potential price turns might occur if you look at the various possible places where there is a crossover that does occur. And you can see, for example, you have some crossovers here, you have crossovers here, and you have crossovers here. But the question here is, where is the real signal that can produce a winning trade? So we need to take a look at a couple of other indicators, add them to the mix as to how they can help us make a decision about when and where to make a trade. And we're going to add to that study, first of all, the moving average convergence divergence, or also known as the MACD more popularly. Now you will see on the bottom panel of that chart here where the MACD shows you, if we'll line up our cursor here, we'll show you that there is a crossover here with that blue line below that gray line, and that suggests that the overall tendency of the market now is to the downside, and you can see it maintains that posture all the way down through here, through all those squiggles of the moving average. You'll see the same thing as it turns to the upside, where it does turn up and kind of overrides all the various squiggles that are happening with that one indicator, the moving average. In any situation, you almost always have to use more than one indicator to get a clue, better clues as to where to take a position. Now that's a trend following type indicator. We're going to add another one, which is a more of a range trading indicator. That's called stochastics, and that is on the bottom panel there. You can see that the stochastics looks a little different. It bounces back and forth between a threshold. If it goes above 80, indicates overbought. Below 20 indicates oversold. When we look at those, you can see where it lines up with the other indicators up above, that as stochastics turns down, MAC turns down, and we have the crossover in the individual moving average on that particular date, November or September 25th, you can see good sell signal overall. Then it's a matter of staying with the indicators, writing them as they go along. And of course, when we say indicators can give you some good clues, you don't rely only on the indicators. You do have to be aware of fundamentals. You have to know the times when, for example, an earnings report, government report, or so forth is coming out. You have to know what the overall chart pattern is, what's the previous price history going back in time, previous highs, lows, support, resistance, that type of thing. But now we come to the decision point where we have to make a decision as to how to use these indicators to get into the market. A lot of different ways that it can be done on the backside, but we can use the indicator to help us get into a position. And the way we're going to do that, we're going to look at this one turn here that occurred in November. On November 19th, that kind of a long candlestick that you have there, you can see that on the bottom panel, the stochastics moved up. The MACD was ready to make a crossover, and so what we're suggesting as a possible strategy using these indicators and these signals, when you see the crossover and the moving average occur, place a stop above the candle high of the indicator. That would get you in at approximately, in this case we'll just say as a rough average, around the 1390 area on the trading day. Depends upon where you want to put your stop, on the amount of risk tolerance you're able to take. In this case, it would be quite a ways down. If you went with this previous low, you'll have to make that decision. With the indicators, you still have decisions to make. Some of them are going to be a little subjective, but this way you do have clues as to how to use these indicators to take advantage of the situation, the underlying situation in the market, the momentum, and where the strength and where the weakness in that potential trend might be to be able to take a trading decisions. The value of the indicators is limited only by your imagination.